You know the feeling. It is 3:42 a.m., and your eyes are burning. The room is dark, lit only by the blue glare of your phone screen. You promised yourself you would go to sleep 3 hours ago. You really did. But you just need to check the price one last time. Because if it dips, you buy. If it pumps, you sell. It sounds so simple, right? It sounds like the easiest money in the world. Whether you are deep in the trenches of the crypto wars or you're just sitting on the sidelines watching your weird cousin post on Facebook about going to the moon, you need to understand the machinery behind this beast. There is a specific life cycle, a brutal mathematical meat grinder that every single trader goes through. Some people make millions. Most lose their life savings in a way that feels mathematically impossible. Today, I am going to walk you through the stages of a crypto trader, from the first hit of dopamine to the inevitable liquidation, and finally, for the survivors, the enlightenment. I am Heisenbank, and on this channel, we don't just read the news, we break down the financial systems designed to harvest your wealth. Most people think trading is about predicting the future. It's not. It's about surviving your own psychology. It starts innocently enough. You hear about Bitcoin. Maybe it's on the news. Maybe it's Elon Musk. Maybe it's your Uber driver giving you financial advice. You check the price. $60,000? Whistle. Too expensive. You miss the boat. You think, I can't afford a whole Bitcoin, so what's the point? But then you scroll down. You see these other coins, the altcoins, and they are cheap, like pennies or a fraction of a penny. You see a coin that costs $0.0004. And you see the volatility. In the morning, it's up 10%. By lunch, it's down 5%. By dinner, it's up 20%. And suddenly, the gears in your brain start turning. You think you have discovered fire. You think, wait a minute, if I just buy when the line is down here and sell when the line is up here, I make a profit. And you do the math. You pull out your calculator app. You think, if I do this 3 times a day, just compounding 5% gains, let's run that brutal math. If you start with $1,000 and you catch a 5% move every single day, in 30 days, you do not just have a little money, you have over $4,000. In a year, you own the planet. It feels like an infinite money glitch. It feels like you are the smartest person in the room and everyone else with a 9-to-5 job is a sucker. So you deposit your money, you are ready to conquer the world. You buy the dip, you feel like a genius. The price goes up, you sell. But then you look at your balance. You made a profit, but it is smaller than you calculated. Why? Fees, slippage, the spread. You realize that every time you click a button, the exchange takes a bite. There's a maker fee and a taker fee. You are not just fighting the market, you are fighting the house rake. But hey, a profit is a profit. As long as you can compound it, it's just a matter of time. You're still up, you're winning. And then it happens. The candles turn red, brutal red. You bought the dip, but the dip keeps dipping. You think, what is going on? The plan was buy low, sell high. Why is it still going lower? You look at the number. Your $1,000 is now $900. You're losing a week's worth of groceries in 10 minutes. Panic sets in. Your lizard brain takes over. You think, if I don't sell now, it might go to zero. So you sell. You realize the loss. You have $900 left. You tell yourself, it's okay. I made profit before. It cancels out. I will just be smarter next time. But literally, and I mean literally, 5 minutes after you sell, the price rockets back up. You stare at the screen. You feel sick. If you had just held on, you would be in profit. You feel betrayed. You feel stupid. So what do? You buy back in. But now the price is higher. You have less money buying fewer coins at a higher price. This is the FOMO trade, fear of missing out. Now you are terrified to look away. You stare at the screen all day. You are waiting for that perfect high to sell. But the market? It knows you are watching. It moves sideways. It does nothing. It is boring. Eventually, your body shuts down, you fall asleep, and the next morning, you wake up, you check the history, it pumped. While you were drooling on your pillow, the price went to the moon and came back down. You missed it. Again. You feel like an idiot. You feel like the universe is personally pranking you. So now you're angry. Now it is personal. You aren't trading to make money anymore. You're trading to get even. The price starts dropping again. This time you think, I'm not selling. But it keeps dropping. It breaks support. It is crashing. Your brain enters survival mode. You think, if I sell now, I save what I have left. Then I will wait for the absolute bottom, buy back in with my remaining cash, and when it recovers, I will make back my losses plus a huge profit. This is the sniper fallacy. You think you can time the exact bottom. So you sell. You eat the loss. It immediately goes up a tiny bit. You panic. Oh God, I'm missing the recovery. So you buy. Then it drops again. You panic. It's a fake out. So you sell. Buy, sell, buy, sell. Every transaction is a fee. Every trade is a loss due to the spread. You are churning your own account. You aren't investing. You're feeding the whales. Suddenly, you stop. You look at your wallet. You have lost 50% of your money. Half of it gone into thin air. And here is the brutal math of loss that nobody tells you. If you lose 50% of your money, you do not need a 50% gain to get back to even. You need a 100% gain. You have to double your money just to be back where you started. You feel desperate. You need to make money fast. Spot trading is too slow. 10% gains will not cut it anymore. You need power. We are about to enter the phase where traders lose their souls and their houses. But before we go into the dark world of leverage, look, the banks and exchanges profit off your ignorance. They rely on you being emotional. If you want to stop letting them farm you for liquidity and actually learn how money works, make sure to subscribe. Turn on notifications so you do not sleep through the next upload. Now, let's talk about futures. You discover derivatives. You see a button that says 10x, 50x, even 100x. Here's how you rationalize it. You have $500 left. If you use 10x leverage, the exchange lends you money so you are trading with $5,000. If Bitcoin goes up just 10%, you do not make 10% on your $500, which would be $50. You make 10% on the $5,000. That's $500. You just doubled your account in one trade. You think, this is it. This is how I get it all back. But here's the part you ignored. If you are leveraged 10x and the price drops just 10%, your entire $500 is gone. Poof, liquidated. The exchange takes it all to cover the loan. If you're crazy enough to use 100x leverage, the price only needs to move 1% against you and you're wiped out. 1%. A sneeze moves the market 1%. But you don't care. You're desperate. You open a long position. Now, you need to understand something about the market. It is not random. It is an ecosystem of predators. Market makers and exchanges can see where the liquidity is. They know exactly where everyone has placed their stop losses and their liquidation points. Have you ever seen a chart where the price suddenly crashes down, hits a specific number, and then instantly shoots back up? That is called a liquidation hunt. The smart money pushes the price down just enough to trigger your stop loss, just enough to liquidate your leveraged position. They take your coins to the bottom and then ride the price back up without you. Statistics show that over 70 to 90% of retail traders lose money in the long run. Why? Because when you trade with high leverage, you are playing a game of Russian roulette where you have to win every time. Let's say you're a good trader. You win 9 trades in a row. You feel like a god. You are compounding your account. But because you are confident, you keep using your entire wallet balance for the next trade. On the 10th trade, the market moves against you. You get liquidated. It doesn't matter that you won 9 times. Any number multiplied by 0 is 0. You stare at the screen. Balance $0.00. The spiral is complete. You have effectively transferred your wealth to someone who was more patient than you. So, how do the people who actually make millions do it? They go through everything I just described. They lose everything, and then they realize the truth. They stop trying to predict the next 5 minutes. They start looking at the next 5 months. They stop trying to buy the absolute lowest dollar and sell the absolute top dollar. Think about it. To sell at the absolute highest price, you need to find someone ignorant enough to buy from you at the absolute highest price. That is the greater fool theory. But at the very top, liquidity dries up. There are no buyers left. Everyone is trying to sell. If you try to dump $1 million of crypto at the peak, you will crash the price yourself. Smart money does not wait for the peak. They sell on the way up. They sell when everyone else is buying. They sell when your taxi driver is asking how to buy Dogecoin. They are providing the liquidity for the hype. They do not have FOMO. If the price keeps going up after they sell, they do not care. They secured the profit. They took the money off the table. They understand that 20% profit in the bank is better than 200% profit on a screen that can vanish in a second. The final stage of a trader is detachment. You stop looking at the chart every 5 minutes. You stop calculating how rich you will be if this coin hits $1. You realize that the market is a device for transferring money from the impatient to the patient. If you are chasing pumps, if you are revenge trading, if you are using 50x leverage because you are broke and need money now, you are the prey. But if you can control your dopamine, if you can accept boring, slow gains, and if you can sleep while the market burns, then and only then do you have a chance. I am Heisenbank. Class dismissed.